Hello, welcome to the April 6th edition of Success by Association Live. Today's issue is sponsored by Biltmore Farms Hotels and Jordan Price Law Offices. We thank them for their support of AENC. Today's article is written by Maria Kopp with Caro Business Solutions and is reprinted with permission. The article is titled Employee Retention Tax Credit and Your Company. What is ERTC or ERC? The Employee Retention Tax Credit. The Coronavirus Aid, Relief, and Economic Security Act, otherwise known as CARES, created a new employee retention tax credit for employers who closed, partially or fully, and experienced significant revenue losses resulting from COVID-19. The purpose of the tax credit is to keep workers on the payroll during the pandemic. The ERTC is an offset to payroll taxes, not an income tax credit. The original credit began March 2020 and was extended through September 2021. Many businesses have failed to take advantage of ERTC, either because they don't understand the benefit or they assume they are ineligible. The IRS anticipated that 70% to 80% of businesses and tens of thousands of charities would apply for and benefit from the ERTC. The actual numbers are far lower than that. Employers of these companies and charities have left billions of dollars on the table, up to $26,000 per employee in payroll taxes. How much is the tax credit? CERC is a 70% tax credit for the first $10,000 of earnings paid each quarter between January 1, 2020 and September 30, 2021 per eligible employee. This amount can include the employer's portion of health benefits. Basically, for every eligible employee during this period, an employer would receive a $7,000 tax credit per quarter, totaling $21,000 for 2021. Additionally, an employer can claim a 50% tax credit for the first $10,000 of earnings paid to an employee between March 12, 2020 and December 31, 2020. Claiming both 2020 and 2021 ERC would maximize the CERC for an employer at $26,000 per eligible employee. Can an employer take both PPP and ERC? As of December 21, 2020, and the passing of the Consolidated Appropriations Act of 2021, employers can take both PPP and ERC. Congress will allow employers to claim both, but not for the same dollars of payroll costs. The tax credits can be stacked for the highest benefit to the employer. So key takeaways. ERC provides a refundable credit of up to $5,000 per eligible employee between March 12, 2020 through December 31, 2021. ERC provides a refundable credit of up to $21,000 per qualified employee between January 1, 2021 and September 30, 2021. You qualify if you were fully or partially impacted, or if your gross receipts fell below 50% for the same quarter in 2019 for 2020, and below 80% for 2021. If you were not in business in 2019, you can use the corresponding quarters from 2020. You can claim your credit immediately by reducing payroll taxes sent to the IRS. If your credit exceeds payroll taxes, you will be refunded the difference from the IRS. If you received the Paycheck Protection Program or the PPP loan, you can still claim ERC for qualified wages not treated as payroll costs in obtaining forgiveness for the PPP loan. You can still apply for the Employee Retention Credit. The ERTC program has closed, but businesses and organizations can retroactively claim the credit. That concludes this article. We hope you have a great day.